TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 37. NASDAQ is up 40. S&Ps are up 9.5. Gold contract is down $4.10 at $11.4360. You have silver down 6 cents at $14.98. Light sweet crude up 28 at $51.69 a barrel. The bond market, the 10-year down 11 ticks, 125.31. The 30-year down 9 at 150.18. The bonds, folks, continue to want higher price. You're backing down today with dramatically lighter volume. I suspect before the end of the day, what you're going to see is a turnaround in the bond market once again. King dollar. King dollar can't handle the swing point from the last swing highs out here. King dollar had been up 550 ticks. Right now, you're up at 221. You're at 97.50. I expect you're going to see a failure with price, with volume on good old King dollar. Euro. Euro right now is up, is down 37 at 109.13. Now, if we start with the S&Ps out here, this is going to be a absolutely fabulous day for bulls or bears for the amount of information that's going to release. And this is why. In Europe, folks, we're up from 1% to 2.5%. The bulls have a chance this morning to bring this up over the market in an extraordinary way. Thus far, that hasn't flown. So the divergence between our open right now in Europe is pretty intense. The first sell down from an operator inside the marketplace, inside the S&Ps, is pretty intense. At the open, we are down to 21.10 on the S&Ps. You get a high volume spike there. That's saying, guess what? You're not going to hold. More than likely, we're actually going to go negative versus positive when, in fact, you have the DAX trading up 1.7%, and the CAT up 1.6%, and the FTSE up 0.6%. Now, the NASDAQ composite. Let's go take a look at the NASDAQ. The NASDAQ composite is breaking out. And more than likely, what you're going to see there, if I use the NDX 100, what you're going to see is also a failure, which is pretty intense. The NDX 100 has reached 111.42. The 111.16 area would be the failure. What you do have in the first half hour of trading, however, is that the price can't hold. And that's really unusual when you get a breakout number one, and in the aspect that what you have is that you have a situation that Europe absolutely is up and up with some juice. Now, inside that correlation, what do we have? The bond market is still screaming that it wants higher price. And if bonds want higher price, folks, what you have is that is saying that equities want lower price. We've been building strength in the bond market since the low that was established in the beginning of June. You're backing down in that 10-year rate today with 462,000 contracts. That is dramatically lighter volume. That's saying that the 10-year wants 127.19. More than likely, you're going to see a lot higher price than just 127.19. Now, King dollar will wrap it up. What do we have with King dollar? What you have with King dollar is this. Excuse me, folks. King dollar got to a price point today of 97.91. You are testing the swing highs that were generated in May, as well as the swing high, smaller swing high on July 7th. Bottom line, you're not going to hold either one of them, which is amazing. And you're going to have 28,000. We're at 28,000 contracts right now. You're going to have dramatically lighter contracts. So what does that set up? That sets up a lower dollar. Now let's go over to the gold contract. They've been trying to whack gold forever, and they have whacked it forever. Guess what? They can't get it any lower. We got to 1140.60 out here today, or 1143.70. Bottom line, gold also wants higher price. Dollar wants lower price. S&Ps want lower price. The NASDAQ is what's going to give you all the information. I expect what you're going to see is another failure there. And guess what? What does that mean? That the correction on the way down is still on. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great one. Have a safe one. Look forward to speaking to you right back here tomorrow morning, 10 o'clock.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.